All right, welcome back, insiders. In this video, you're about to get 10 plus videos worth of knowledge because I've studied and dissected over 10 Bitcoin price halving videos, from traditional news outlets to scientists, famous investors, hardcore podcast debates, and everything in between. I'm going a little crazy. Anyway, I've spotted 3 of the biggest recurring trends in all of them. If you want to feel confident you haven't missed anything regarding the BTC halving, this video is for you. It took me days of watching, note-taking, and many rabbit holes, so I'm super excited to finally get to release it and share it with you guys. I'll be sprinkling in some very quick basics on the BTC halving. I'll do a quick summary of each video that I watched, my opinions along the way since I've been in the space since 2015, my action plan before and after the halving, and a little bit of a bonus at the end. Since nothing beats real hands-on learning, you also see me buy one of the top 5 Bitcoin ETFs at the end of this video. First of all, you might be wondering, what is all this going on? This is actually how I found a lot of these videos. I just typed in Bitcoin and halving. A lot of these are actually some of the newer videos even, or some other videos I haven't seen. And sometimes you just find a video and then from there you'd end up going through a rabbit hole of other videos. So that is my source. I didn't want to just be transparent, I guess you can say. I also came out with a video recently on Coinbase, is it still a buy? And I talked about the halving quite a bit here. And honestly, it's hard to go anywhere on the internet without learning about the halving. But I still wanted to do a little bit of a micro and macro analysis just to get the video started. And I think it's always a good starting point, honestly, is the fundamentals. So here's a nice PDF from Bitwise that did exactly that. They talked about the fundamentals really, really nicely. So back in 2009, right after the financial crash, that's when Bitcoin was invented. At the time, you can give your computer and help mine the protocol to protect it. And at the end of the day, for your computer resources, you'd be rewarded, or a pool would be rewarded, and there usually be a bunch of miners working towards one pool, and all these pools would compete because it's much more likely if you were part of a bigger pool that you would be rewarded. Now let's talk really quickly here, a nice little definition from Investopedia to have some good fundamentals. Anyway, mining is conducted using hardware and software to generate a cryptographic number that is equal to or less than a number set by Bitcoin's network's difficulty algorithm. The first miner to find the solution to the problem receives a Bitcoin reward, and the process begins again. Very, very straightforward. Now, I took some additional notes here because there's a few things I want you guys to know. Every 10 minutes, roughly, block reward is created. And there's 6 blocks an hour, 24 hours in a day. So there's 144 blocks that get created a day. And 144 times 65 days in a year is 52.5,000 blocks a year. So what happens is every time 210,000 blocks are mined, that's when a halving takes place. So you can basically say that in a year, we have this many blocks that are mined. And if you divide that by the total required to have a halving, you get it roughly every 4 years. And that's why these mining sites, a lot of people, or they'll actually adjust constantly. So it's not a very specific number, and it can always be off. And that's why even a month ago, we didn't know the exact date of the halving, and now we do. It's tomorrow because the difficulty adjusts every 2016 blocks, or roughly every 2 weeks. So within 2 weeks of the halving, you should basically know very precisely when it's going to take place. It'll still be a little bit off because time is not a relevant factor in the Bitcoin algorithm. It's only something that we like to translate. Anyway, here in April, so tomorrow, we're going to have 3.125 Bitcoin being rewarded. And scrolling down here, Bitcoin price before and after halving. So this is what we want to talk about. And this was 09, the inception. So this is when you got 50 Bitcoin for being rewarded, right? And then the halving happened and it ran up 8,000%. And then all of a sudden went down to 25. Oh, geez. Apologize for the rough writing. I'm using a mouse. It ran up. So this was before. So this was right before the halving, right in this area. And then afterwards, it ran up 285%. Really crazy. And then this area is the 12.5. And then now we're in the 6.25. And then afterwards, we're going to be in the 3.125, right? That's what's happening. And this is the one reason a lot of people are worried about is we're actually at all-time highs before the halving. We did come down a little bit, so it's a little bit more like a channel you're seeing right now. So we're kind of in this area right here. So we have come down from all-time highs, but this is one of the biggest rallies before the halving. That's what's making a lot of people a little bit nervous here. Also, I do want to note that after the halvings, there's usually not that much action. It's a little bit flat, and sometimes it even goes down a little bit. And you can see here the spot trading volume. So this is the amount of activity before it was the price. The activity drops quite a bit too. So here 12%, 50%, 22%. So it's like all this hype right now that we're experiencing, and then the price, or then the action goes down a little bit of buy the rumor, sell the news, and that's maybe what we're experiencing. But we'll talk about what we're seeing across the board in all these videos. Now, the last thing I did want to talk about before we talk in the trends is how much does it cost to mine a Bitcoin? Because I think it's something relevant to keep in mind. If you can get 4.7 cents per kilowatt hour, it would cost you about $20,000. Now, I was like, where are you getting 4.7 cents a kilowatt hour? I was like, this is crazy. Obviously, there's many more factors. This article breaks down like hardware and efficiency and GPUs and all that stuff. But I just, as a really rough estimate, right? 20,000 for 4.7 cents kilowatt hours. Now, I was thinking, where are you getting these numbers from? And look at this. Like, you would have to go down to like Turkey or Qatar. I mean, that literally produces oil, is like their major export. But if you go anywhere else, I mean, I'm in Germany right now, and it's expensive. 4 cents per kilowatt, 40 cents. That's like 10x the price, right? That means it would cost me like $200,000, right, to mine a Bitcoin. So many countries, it's too expensive. You have to have a good energy source. Otherwise, you're just gonna go absolutely crazy. So I would probably say, let's say if this is if the price is roughly 60, so we could 3x this. So we're talking like anything under 15 cents, and it's worth mining. So like right around Brazil is where it gets too expensive. Or maybe you have some solar panels, or you have some other solutions. Maybe you're next to a nuclear power plant and it literally doesn't matter because energy is free. Let's move on to the trends and the 3 trends that I spotted. And obviously no one really knows what's going to happen, but these are, again, the trends that I found were recurring themes. And the first one, bear with me here, because there's a lot of debates, heated debates on both sides of the aisle, if you're a bull or a bear, but I have yet to find one bear debate that is very legitimate. And I'm probably going to get some heated comments about this, but here it is. People have said it's a scam, it's going to zero. That's not really a good argument. So what is your argument? And even famous investors, right? And I'll show you a few in a second of our time, weren't able to say anything besides, just calling it names and saying it's rat poison or something like that. Now, here's one case that was maybe a good bear argument. And the best case I found was the US won't allow another currency to beat the USD. And that also means any other governments won't allow it. Now, here's the problem with this debate. This argument, in the eyes of the videos I watched, and I would actually agree with it, is already freed from vindication. So it's not guilty because of the approval of the USA ETFs, which have also been a catalyst for other countries to approve Bitcoin ETFs. So all of a sudden, the biggest bear case against Bitcoin is gone. And I was like, okay, what else is there, right? Then people were calling it criminals like Bitcoin, only criminals use Bitcoin. I don't think that's true. We've read many articles where criminals were actually caught because Bitcoin is quite transparent. If anything, criminals like cash. Criminals love fiat currency. That's why Germany is such a good place to commit crime, because there's Datenschutz, so nobody knows who you are. And it's a very cash-central country. I mean, it is like the perfect country to commit crime, but that is a different discussion. So I was like, okay, none of these bear cases, and all of the videos I watched, not one. I mean, that was the best one. The US government wouldn't allow it, and maybe they were going to ban it or make it illegal or something. So boom, ETF approval. What about that, right? Nobody was able to really counter it. Anyway, number 2, biggest trend. Scarcity was like the biggest topic, which makes sense, right? A lot of people were saying it's more scarce than gold. And you're thinking like, what does that even mean? How do you become more scarce than gold? Like, where's the metric? And the metric they used is the stock to flow. We'll talk about that more later. But in essence is how long does it take to replenish the whole entire current supply of an asset with the new assets coming in. And Bitcoin would take longer than gold, for example. We'll talk about that more in a second. ETFs buying more than new supply. So ETFs are buying like crazy, and they're buying more than the new supply is coming out. Big bullish push right there, and that's why there's been that big appreciation with Bitcoin, and it hasn't really pulled back as hard as the other cryptocurrencies. And actually, a lot of people are saying supply is much lower because there's a lot of Bitcoin that's lost, that's held in long-term accounts, that it doesn't move around a lot. So there's also that to increase scarcity. And then the number 3 thing is price goes up after the halving. Always. So far, we've always seen that to be the case. Prices see a major rally after the halving between 12 and 18 months. We talked about how earlier it was a little bit choppy in the short term. And then the last one, strong, constantly proven right formulas showing we should hit 100,000 this cycle and over 1 million within 10 years. I'll show you guys these formulas that are right again and again and again. And Bitcoin's the perfect thing for that because it's just one big mathematical being, so to say, without the tampering of a third party. And then I thought I would share a bonus here. Typical media sites always have a sarcastic tone, and it's all emotions. Don't watch them. Literally every time I watched a Bitcoin, like from Fox or CNBC or CNN, it's always a sarcastic tone. Focus on following vets in the industry and listen to their cases, bull or bear, right? Anyone that's been in the space for a lot of time, even Peter Schiff, who is super anti-crypto, at least he's been in the space long enough, and he's not like, you're not listening to some host, has no idea, and they're just having that sarcastic voice in their the tone in their voice. It's really exhausting, right? So here's a tweet I found that I feel like really sums up this topic. There isn't a single person with a negative opinion on Bitcoin who has spent 100 hours studying it. That's how I'm starting to feel as well. So keep that in mind. Now, the first video I want to talk about is from Andre here, and this video is pretty good. He goes all over the fundamentals of the halving, so that's really important. He explains that Bitcoin, more rare than gold, measured by the stock to flow. This is what we talked about earlier a little bit, how many years it would take to recreate the current supply of something. So total stock to asset, so how much stock of the asset is there? And then the flow, how much is created on a daily basis. So example with gold, there's around 244,000 metric tons available, total supply, divided by the roughly 2.75 mining metric tons daily. Now this number goes up and down based on the price of gold, because if gold is a higher price, it's more attractive to mine, so people are going to willing to mine it. And if the price goes down, less people are willing to mine it, right? But in general, it takes about 1% you mine a day, so 88.73 years is what it comes down to roughly, if you want to remine the whole entire supply of gold. Now with Bitcoin, roughly at a 19.5 million coins available and 164,000.2 newly minted Bitcoin post-April, so after the halving, it would take 118.7 years. So for the first time in history, Bitcoin is going to be more scarce than gold based on the stock to flow method. So that's a really interesting analysis there. I really like that one. And then also investors here, he talked about, Andre talked about in this video, BlackRock purchased 12,000 Bitcoin last week, Fidelity 6,000. So there's more Bitcoin being purchased by these ETFs, by these new ETFs that is even coming out. These are crazy, crazy numbers. I mean, that alone, these two ETFs, that's 18,000 Bitcoin they bought last week. Now let's really quickly here. Remember, so 144 Bitcoin, 44 Bitcoin is blocks are made every day. And if we times that by the current number at 6.25, we get 900 a day times 7 days. That's 6.3 thousand Bitcoin a day. And this number is about to go down to 3.125, right? So that's 3,000 new Bitcoin a day. And I mean, think about that for a second. Do you see that number up there, 3,150? If we come back, that's just like a fourth of the amount that we actually need just for the ETFs alone. And that's why people are saying there's going to be some major appreciation, which totally makes sense. Price after and before halving is a bit random, but this is the first time prices are all-time highs before halving is another concern. Also, a substantial price increase 12 to 18 months after halving. It's just the common rule of thumb. This guy did his research. First video was really good, a lot of fundamentals there. The second video, actually from Andre as well, talks a little bit more about price. I thought this was a pretty good video as well. And I took less notes here because it really talks about this power law formula, and they do a lot of diving into the facts behind this. And this is a formula you can find through all walks of life. And they basically applied it to Bitcoin, and it seems to track it really, really well. Right now we're at the halfway point. Let me see if I can zoom in here a little bit more. And yes, I can. And we're pulling back a little bit, but we are under this linear regression fit. The red line is support, purple line is resistance. Let me zoom out again. And you can see this green line is kind of like the average. So we're still below that average price. And that's a pretty good sign. Now, based on this, we should be at roughly 1 million by, I think it was like 32. The date is, yeah, so you want to look at the green line, and then the green line by 2032 mid will be roughly at about 1 million if we're right in this green line here. 7 years from now, we'll be at 1 million according to that. It looks like, according to this, close to 200,000 in this cycle. Worst case, 150,000 by mid 2025. Should reach 1 million by July 2033, they say, in this, based on this long-term power law. Hey guys, did you know you can get this content early in text form on tradejournal.co? For more content like this, be sure to follow my portfolio, my profile, at tradejournal.co/Winkler. Once you follow me, you'll be notified of new trades or posts that I come out with. You can also fine-tune your interests. For example, if you're only interested in my stock investments, but not my day trades or my NFTs, just mute those portfolios. You can also get your own trading and investing analytics compiled for you. All you need to do is create an account and then follow the new onboarding guide to get set up. Now with 25 brokers with API sync, it's easier than ever. Your trades will automatically be imported for you, saving you time and any human errors. Know the why behind your P&L curve and how to fix it. It's time to start maximizing your trading and investing alpha. Create your account on tradejournal.co today. The next video I really liked because it was a little bit more on the mass and it was a little bit more monotone. Andreas explains Bitcoin halving 2024. And somehow monotone in Bitcoin space is kind of refreshing. So it was really nice. And it was the scientific approach. So what are the numbers actually showing? And I highly recommend this video to anyone who wants more of that. But he talks about how everything's actually happening in Satoshis. Bitcoin is, there is no such thing as Bitcoin because the white paper only talks about Satoshis. And a little thought here, these thought bubbles are just my personal thoughts. As a coder, I know that integers are quicker than floats, so you typically want to use them when appropriate. Float is basically just decimal place numbers. So I was thinking that's probably why, to make it, try to make it as fast as possible. He basically says there's a shift in the, it's not a division, right? So you're not dividing Bitcoin, but there's a shift in the right, in the binary number. So you're basically just moving down the amount of Satoshis that are rewarded. And that's really what's going on. So only place where there is fractions of a Satoshi is the Lightning Network, where decimals are rounded up and then they're placed back on the Bitcoin or Bitcoin network. So some myths he talks about in this video is that there's just pure speculation myths. Bitcoin death spiral, where miners are no longer profitable due to the halving. This is a myth because everything is, the difficulty is constantly recalibrated every 2 weeks. So if it's not worth for you to mine anymore, there's going to be less miners, and then the difficulty is going to go down, and it's just going to constantly readjust. Microeconomics, supply and demand. If demand remains the same and supply is cut in half, the price should double. So this is a big microeconomics myth, a speculation myth, right? He basically says that nothing just instantly happens. It takes a while to see what's going to happen, and then over time, that's why a lot of other videos talk about the 12 to 18 months, you kind of figure out what happens from there. So tomorrow, nothing really major should happen, is ultimately what this guy is saying. And based on what we saw with the Bitwise, you can see that, yeah, in general, not a lot happens after the halving, right? 1 month after halving, all this stuff doesn't really actually change. If anything, the volume goes down and there's a consolidation period. So good to note there. Let's keep going. there are some speculation truths. Things are different this time. Bitcoin price usually before halving was relatively low. This time, as we saw before, we're at all-time highs or really close to it. So he's saying that it's probably all priced in advance, probably priced in by around 6 months because of those ETFs that came in and added a bunch of buying pressure. So all-time high hash rate and institutional investors. There we go. Halving countdown websites we talked about before. These are usually wrong because the hash rate difficulty often changes. So that's why you might be wondering, why don't they actually know, or why are these numbers changing? Changes every 2 weeks and everything gets adjusted. That's why the calculations are often wrong. Again, Andre's prediction is nothing is really going to happen. Usually the day of and around, nothing happens until miners know what they need to adjust. So once the adjustments happen, then there can be more predictions of what will take place. Anyway, block 840,001 is going to come out, and that's the start of the new halving tomorrow, the 20th of April. Now, the next video we want to talk about is this is a rough video here on Fox News. Oh my lord. Let's just go through it. First of all, the reaction, and this is again one of my little thought bubbles here. Let me go up. The reaction was a bit sarcastic, belittling from the host right away, and I was like, oh, do I even want to watch this? But I still went through it. Anyway, the guest pumps up the core values. It was a Bitcoin enthusiast. You've probably seen it around the space quite a lot. Not regulated. It's the currency of the people, all that stuff. And then right away, they bring somebody else in on the other side, Peter Schiff, who's like the biggest gold diehard and crypto like villain. He really hates crypto. Which is kind of weird because I don't think you have to hate one or the other. I don't think it's Bitcoin or gold. I think it could actually be both. They have a different purpose in my eyes, but anyway, it's really more entertainment. Crypto bull versus gold bull / crypto bear. So I think that's classic Fox News there, and really any sort of institutional or classic news media outlet. The next video, this was a long one. A Great Depression coming and Bitcoin going to $0 or 1 million. Wow, this was quite the watch. And I summarize it a little bit quicker because there's just so much to talk about there, and a lot of the things we've already talked about. Anyway, it's a little bit of the old versus new debate. Peter Schiff is kind of, this is how I summarized it. I summarized it a little bit more. This guy, Peter Schiff versus Raoul Pal. This guy. This is a crypto guy. This is a anti-crypto guy, gold guy. And he was also in the last video. So you actually see this guy in the space quite a bit. Peter Schiff, he's an economic pessimist, predicts often economic downturns and argues that policies like excessive government spending and monetary easing could lead to a financial crisis. I mean, this is pretty much true, right? Hyperinflation, not hyperinflation, but we're seeing worse and worse inflation, and the value of dollars since inception has gone down like 99.9%. So no surprise there. He's a little bit more bearish on the economy than other people, but there's that as well. And he's bearish on Bitcoin. He's a vocal critic of Bitcoin and cryptocurrencies, often describing them as lacking intrinsic value, and it's a speculative bubble. He argues that Bitcoin could eventually become worthless. Yeah, I don't know what you want me to say there. Intrinsic value, what's the intrinsic value of the US dollar, right? Is the fact that the government backs it. Same as Bitcoin is the fact that the people back it, right? I don't know. You could argue that back and forth a million times. It's almost like a dead discussion at this point. Raoul Pal, he's economic concerns with different focus. While acknowledging potential economic challenges, he focuses more on systematic changes and the impact of global economic structures. New technologies and financial systems could transform, save the economy. So he's a little bit more optimistic and thinks, what's the new stuff out there? So he's more of a technologist. Bullish on Bitcoin, generally optimistic about the future of Bitcoin and cryptocurrencies. Bitcoin has the potential to reach very high valuations, he says, like $1 million, which you saw also in the stock to flow model, or the, oh man, what's the other name of that model? This one here, the long-term power law model. Yeah, that's what you saw here. And due to factors like adoption as a store of value, which is true, right? Countries are adopting Bitcoin now, increasing institutional interest, ETFs, and its properties as a digital asset, deflation, right? So he's very bullish and he is very bearish. That was almost the essence of this podcast. I'm not going to lie. But they threw around some good points. It's probably worth a watch if you're new to the space. Otherwise, you've probably heard a lot of the arguments a dozen times. Here's another Bloomberg Technology, another news video. This one was definitely a little bit better to watch, but again, sarcastic references all the time from the moderator. It was almost exhausting. It's like, why don't they just, I don't know, just approach it a little bit more like Tagesschau news in Germany, just like a little bit more dry. I guess nobody would watch it then, huh? Anyway, more about the fundamentals of Bitcoin, the halving. The whole beginning was really breaking it down. They talked about the past Bitcoin cycles, which we also talked about in the beginning of this video on Bitwise, and federal economic concerns, debt, and money printing. So again, it's that government is printing too much money, and we need something a little bit more stable that will appreciate in value as opposed to depreciate in the value. So the biggest stories, so he talks a lot about like the hype right now. It's in stable coins, which are basically replacing, or like it's an updated ACH. So it's like very instant. There's a lot of DeFi being built on stable coins. So I do like the fact that he talked a little bit about something different, and a lot to research there in the stablecoin area. Although I'm not sure how investable it is for other people, like the average retail investor. I think you have to build something a little bit more project-based. The next video here is, is this one right here. Everything is wrong about Bitcoin halving. Michael Saylor's 2024 Bitcoin prediction. Michael Saylor's been in the space for a long time. He's been quite the advocate for crypto. And this was a good video as well. So Bitcoin ETFs are sucking up all the Bitcoin. So again, recurring theme, Bitcoin ETFs. Bitcoin is basically being taken public on the financial markets. This was a really interesting comparison because for the first time, it's available to the public. I mean, Bitcoin was always available to anybody. Anyone that could just buy it, right? But if you had, let's say, what he means by that is if you had like a pension fund, right, with $500 billion in it, like you couldn't really buy Bitcoin. You could, but most things would consider it too risky. These ETFs really open up the whole entire financial markets. And that's why he's called it like taking it public. And I really like that analogy. He talked a little bit about the histories of ETFs. Back in 1993, the SPI came out, and it was basically like the new savings account for everyone. The problem is it buys the top 500 stocks blindly at any price. And he says it basically creates a lot of problems, right? There's not stock selection anymore. So it doesn't really matter the price of the stock as long as you're in the top 500. Michael Saylor also points out, since the big Bitcoin ETFs are now out, everything is just different because there's just less supply due to halving and ETFs accumulating. Due to a big success of Bitcoin ETFs in the USA, now more pressure on other international markets to get their ETFs approved because people have seen, oh, hey, USA is doing it really well. We want to do it really well, or we want to do it as well because our customers are now demanding that we have a Bitcoin ETF. So America did it, they pioneered, and now other countries are following along. Reduction in index fees, like we're going to talk about a little bit later. Lower fees means more asset price appreciation because less fees going to the ETF managers or less money, and more money going into the asset and the actual holders of the asset. Many people do or don't, so big money comes in big waves. This is an interesting point. He said there's a lot of people that once you have a certain net worth, right? Like putting $1,000 into an investment isn't worth it. So you're just not going to do it if you're like a billionaire, right? But putting, let's say, $10 million is worth it. So now that an ETF is approved, all of a sudden somebody who is waiting for something like that, who has a lot of money, is going to be a lot more interested. This is an interesting thing I have not really considered, but yeah, it's totally true. So here he shuts down that biggest risk factor. He said starting in 2024, the biggest risk for Bitcoin was the government would ban it. And that's totally gone now. Because the ETFs are approved, right? Obviously, there can always be something else. Right now, Coinbase is having some securities issue. Is certain coins a security or not? And they're tied up with some litigation with the SEC. But the Bitcoin ETFs are a big approval right there. Tied up Bitcoin investments. This is something I could relate to, and I'll talk about that a little bit more later on this video. Bitcoin futures slowed down the price after the approval since it's expensive to move future positions around, so people just wait to roll out of futures and into the spot. around expiration, right? You don't want to move money too much because there's always a transaction cost every time you do that. People also stuck in legacy funds like Grayscale, which has a higher fee amount. You'll actually see in a second that Grayscale has been going down compared to other funds. So because their fees are high. And here's a little thought bubble from me. Maybe it's good to avoid fees. Buys and sells can be expensive, so next cycle you'd move into a better investment vehicle. So whenever the time comes that you have to sell or whatever, or the futures expire, then you move to the next vehicle, but you won't do it in the meantime because it's expensive. Bankruptcy estates like FTX, Genesis, Celsius, Voyager, Three Arrows, RTX, I wrote Genesis twice, Alameda, etc. You know what I forgot to write here? BlockFi. That's what I forgot to put. So my money, for example, I had a lot of money on Bitcoin, BlockFi, and that, you know, is just being held up in litigation. So those are the tied up Bitcoin investments. Let's keep going here to the next video, which is crushed on every measure. This video is actually kind of funny, a little bit more entertainment. Again, Peter Schiff, this guy's really everywhere. Like, if you want to debate Bitcoin, this guy's like your perfect person for that because he's such an anti-Bitcoin person, and his counter investment is gold. And a lot of people compare gold to Bitcoin. He doesn't, and it's just constant back and forth anyway between the two. So value of gold versus inflation. Gold has stagnated for a long 50 years when accounted for inflation. Gold really hasn't moved much if you account for inflation. Really, what gold is a hedge against inflation. So every other asset has done, every other asset class has done better than gold. They talked about in the video. He doesn't like bringing that up, but it's a fact. This comment actually says it really well. I just found it in the comment section. I was reading a lot of comments because, man, there's some gold in the comments. Anyway, he says gold isn't, or he or she says, gold isn't supposed to catch up. It's not an investment. It's a store of value. It's not competing with stocks or houses. It's supposed to be an anchor in which value can be repeatedly measured, like a measuring tape. The illusion that it's going up is only one comparing it to the dollar. And this is really true. It actually has gone down compared to real estate. So it's just not a great investment vehicle, I would say. Gold goes through long periods of time at the same price, more of a store of value. Houses went up as well as the stock market compared to gold. Schiff believes gold has been mispriced and the rally is coming, which, you know, coming from a trading background, it does have really good technicals at the moment. But I'll let you guys decide that for yourselves. Or we could talk about another video. Let me know in the comments below. Graham Stefan, also many good videos here. Everyone is wrong about Bitcoin. He's quoting, have fun staying poor. Both of those are actually quotes. So let's keep going here. This video is about the most requested topic of his channel. He makes that really clear. So it shows you there's a lot of interest in this topic, right? The best performing asset of the decade, love it or hate it. History of Bitcoin, he talks about, created during the financial crisis, limited to 21 million coins, from geeks to global store of value. That's kind of been the adoption lately. To big ETFs booming, buying a lot of Bitcoin daily, 3,000 to 4,000 compared to 900 minted. This is something we talked about before, but we used a weekly comparison instead of a daily. So really, really important to understand that ETFs, the demand is just so much more than the new supply. So if everyone held their Bitcoin, the price would probably appreciate very quickly. The next point he brings out is USD is the worst performing asset, even with the whole USA backing, the strongest government in the world. I think I need to rewrite this a little bit. The way I wrote it doesn't make as much sense, but yeah, USD, worst performing asset. It's down 99.9% since inception. And it's highly inflationary. So that's the big problem, right? He also talks Investopia's 6 successful currency criteria: scarcity, divisibility, acceptability, portability, durability, and uniformity. And this talks a little bit more about each one. And Bitcoin actually ranks the highest in each one of these. And actually in another chart, there was where crypto ranked the highest only in sovereign because it's not issued by government. So that's in a way a bull case again because it can't be tampered with. So yeah. Anyway, bear cases against it. He listed a few investors. These are the famous investors that are against it. Buffett, not a value producing asset, but you can argue against so many other assets that are not value producing, like, I don't know, USD. It doesn't produce value in and of itself. But he does say US government won't let a random currency replace theirs, which makes sense, and I totally agree with that. But again, ETF approval, what about that? Charlie Munger just says it's rat poison going to zero. JP Morgan says it's worthless and for criminals. And that's kind of, you know, how I feel about cash. Again, Germany, great country for criminals. A few other lesser known people, Rubini, too volatile for store value, which again, I don't know if that's really true. I mean, it goes up and down 20% here and there, maybe sometimes more. But think about, you know, countries with hyperinflation. So is it really too volatile for a store of value? It depends who you ask, I would say. Harvard professor Rogoff says people in power will regulate anonymous transactions, which will they? Because that's cash. That is literally cash. Any country would want to get away from cash if they want to regulate anonymous transactions. Plus, Bitcoin isn't really that anonymous. So I don't know. It feels weird. 100 addresses holding roughly 15% of the circulating supply, he says, is also a problem. Honestly, that sounds a lot better than USD. Actually, I just did a quick Google here, and let's see. The report shows that while the richest 1% captured 54% of new global wealth over the past decade, this accelerated to 63% in the past 2 decades. So there we go. 63% of the global wealth is owned by 1% of the richest. So I think this is more of a statistic of like the power of laws in nature, the 80-20 rule and all that stuff. As opposed to like a flaw with Bitcoin, because that's just how it is. You know, you're gonna have a small people that own a lot and a lot of people that own a small amount, no matter what you talk about. Peter Schiff says it will go to zero. It's the greater fool theory, which is basically you want something to go up, and the only reason it goes up is because the next person thinks it's gonna go up as well. It's a little bit more like a pyramid scheme in that regard, right? The only reason I buy it because I think it's going to go up because there's someone else that's going to buy it, right? There's no value behind it. But I actually got into crypto originally back in 2015 because I needed to pay out affiliates that lived in a country that was too expensive to pay. So I said, I'm going to use crypto to pay them, and it was amazing, and that's how I actually got into it. There is value in Bitcoin, I would argue. Hopefully I'm not too biased here. But, you know, all these arguments, these bear arguments are so easy to debunk. It's crazy. Let's move to price predictions. We have Deutsche Bank here saying less than 20,000 by the end of the year. There goes Germany again. We got Harry Dent, who says less than $200 in the next US crash. That would be pretty horrific. We'll see. And another point, a lot of Bitcoin bulls are quite eccentric, which puts people off. That is a bear case. So that's true. Man, there is a lot of ridiculous screaming with the Bitcoin bulls, and it's always a little bit shady, especially when they dress up like a clown or like they wear really colorful suits. I'm like, oh man, that is like the definition of like a Ponzi scheme or a shady person that you want to trust. So I don't like the eccentricness of the crypto world. And I understand why it puts a lot of people off. So that actually might be one of the hardest reasons. That actually might be the best bear case I've seen, honestly, because perception is everything, right? So I might have to add that to the top. Bull cases, the actual Bitcoin available is much less than 19 million, roughly 17 million based on lost coins, including Satoshi and zombie holdings, right? That are just gone forever, like a lost account, right? You have an account or cold storage and you forgot the password or whatnot. That is zombie holdings. Anyway, price predictions for the bulls. 160 to 180,000 crypto analysts this year are saying 350 to 450,000 next year. That's quite ambitious. 1 million by 2030, Kathy Wood says, and 1 million we said by 2032, based on the law of power formula, and then 2.3 million one day, says Robert Kawasaki. Another bull case is actually international revenge on, or intergenerational revenge on the financial system. There we go. And then many points above that are still part of the intro they talked about in this video as well. Really good video. One of those that I recommend for sure. Congrats. Nice work, Graham Stefan, for that one. Now let's keep going to the next video. Everyone is so wrong about Bitcoin halving. Kathy Wood, 2024, Bitcoin prediction by Jamie Tree. This video was pretty good. Actually, Jamie Tree comes out with some really phenomenal videos. It's really a lot of broken down podcasts is the essence of these videos. So here it is, broken down one more time, even quicker. Kathy Wood believes it at a minimum will maintain value because it's scarce, just like gold is scarce. And then she goes ahead and says it's even more scarce than gold. Bitcoin's growth is 1.8% per year, while gold's is roughly 1% per year. But after the halving, it will be 0.9% growth per year under gold. So the first time new supply is under gold. That's what we're talking about in the beginning of this video. Stock to flow changes everything because it will be more scarce in that demographic than gold. Why is gold a scarce asset? It's hard to find and it's hard to mine. Why is gold a scarce asset? It's mathematically metered to have every 4 years, always less new supply and a cap on max total supply. So mathematically, it is just a very scarce resource because of that. 15 million of the 19.5 million current supplies in strong hands, not moved over 155 days. So those are quote unquote the hodlers. And this is big, view stock to flow above. And that's what I was talking about regarding this. So I think the stock to flow is a really interesting argument. Tech is just now ready for this kind of stuff. New tech takes a while for it to show its value. This is another bullish argument she talks about. Here you can see in 2003, for example, the first whole genome was sequenced, costing around $2.7 billion per person to do and 13 years of computing power. So there was a lot of investment in the space, but there was no practical application for it. 2006 came cloud computing. I mean, now, like, just in the last few years, we started talking about the value of AWS and things like that, right? 2012, first AI deepfake. AIs came out like Deep Blue, the one that won against the chess master at the time. So, you know, it took a long time before we actually started investing in AI, like retail investment into AI. 2017, 2018, transformer architecture. There's a little bit of a typo there I will fix. Capital flowed into these aggressively back then, but should not have, as they were not ready to deliver real results yet. Today, they are ready for prime time. She mentions these are those 5 major platforms that are ready now for prime time, from robotics, energy storage, AI blockchain, multi-omics sequencing, which I might be saying wrong, in the life science space. So that is what she thinks is now ready for prime time. Kathy Wood prefers to invest in controversial space with a lot of FUD, fear, uncertainty, doubt, because those are usually depreciated assets, but they have that ability for a lot of upside. So FUD, FUD. Most people want the standard index, which is dangerous. She thinks the indexes are very, very extended and there's just not enough upside compared to the downside risk. The next video, this Bitcoin whale just dumped 1 billion. This is a little bit of a bonus video because this is already number 11, but just really quickly, here it is. And he says Bitcoin and crypto market cap is currently at a big support. If we break, we could see a bigger pullback. So just some price action right there. He says there's geopolitical risks, and then he says big Binance, SAFU funds selling. So it just kind of goes a little bit about the current scenarios going on right now. Wow, that was a lot. So let's move to my action plan before and after the halving. Now, my action plan is basically to keep buying more Bitcoin, but a little bit of a story time. I've gotten hacked once, lost about 17,000 worth of crypto, and that was on Coinbase. That was brutal. And then BlockFi collapsed. I actually lost $55,000 worth of crypto at that time. And this is the crazy part. You guys are I'm gonna cry inside when I say this. Today, that Bitcoin I lost, because a lot of that was back in 2015, would be worth 1.5 million if I didn't sell, which was my goal. Those were in like investment portfolios. So not your keys, not your crypto, guys. You know how it goes. I do have more crypto, but that was definitely a little bit upsetting, so to say. Anyway, what I want to be doing this time, or this accumulation, additional accumulation, I should say, is ETFs. I like the idea, and I have some money in my Roth IRA, so I want to buy some Bitcoin ETFs in my Roth IRA. And if I did want to buy more Bitcoin, I would buy the spot and move it to cold storage right away. I'm not interested in any more peer-to-peer lending or something like that. I just have such a bad taste in my mouth. So This is actually a really interesting site I like to check out sometimes, bitbo.io. Now here you can see the US ETF volumes, you got US ETF prices, you got the premiums. Obviously Grayscale is going down because their fees are higher. So one of the best fees I think is IBIT, and that's why they have a little bit of a, from BlackRock, they have a little bit of a premium here that you'd have to pay right now because you get, so even though this one's a premium and this one's technically at a discount, I think this one is still better because of the fees on the ETF. Sorry guys, little brain fart right there. You also see the US ETF Bitcoin holdings, which I find really interesting. You can see there's almost 1 million worth of Bitcoin in total holdings, right? And the best one, top Bitcoin ETFs that I found is, we have the IBIT, this is BlackRock. We also have EasyBC, Franklin Bitcoin. We got, look at this, Van Eck has HODL and Burr. So ridiculous. ARK Invest is pretty good as well at 21%. And Van Eck are just a little bit higher expense ratio. So let's go ahead and buy one of these things. Let's do IBIT, which I like. It has a little bit of a premium right now, but that is fine. We will now go to my TD Ameritrade screen. So let me move over to that screen. Which screen am I looking at? Here's IBIT, and let's go to, or let's zoom in on this bad boy a little bit more. And here's actually all the ones that I listed earlier. You can see on the bottom left. Let's see how the market's doing actually right now. We got our indexes up here. It's a little bit of a wash day. We got the VIX up slightly, but not that much. And the SPY is slightly down today, so no major surprise there. And the indexes, the ETFs right here, actually this is futures. This is Bitcoin futures right here. So this one's been going on for quite some time, but we want IBIT. And this is the daily chart, as we mentioned before. So let's go to my trading screen. And what I mentioned before is I'll buy 1,000 of this one. And if you guys are interested, I'll make a whole video on Bitcoin ETFs, really break them all down. What I'll do is I'll probably put like $1,000 into each one, and then we can compare how the fees and all that work. If you're interested in that kind of video, let me know in the comments below. I'll be sure to record more of it then. Okay, so IBIT. So I have auto send off, and let's just buy it roughly at the current price. This would be roughly $1,000, as you saw there in the bottom left. Again, this is what it looked like. So 1,000 cost of trading, 0 commissions on TD Ameritrade, and this will, they will take the spread, right? They're basically winning right now 0.19% off the spread. So the actual price of Bitcoin that they're going to buy is going to be a little bit cheaper. And the same with the selling. They're just constantly winning instantly in that spread. That's how they're making money. And yeah, okay, well, there we have it. Well, now this is kind of ridiculous because right as I click it, the price just likes to shoot up. So what I could do, and I have a hotkey for this, is Alt Q, and that basically forces a market order. So you'll see that right now, Alt Q. Oh, it is not, I have to be day. Okay, let's do that again, Alt Q. Oh, again, I forgot to put auto send off. So usually when I'm day trading, I have day open and I have auto send and I have this closed. I had all these extra things selected for this video. So here we go, Alt Q, and then boom, it forces the order, and then Alt S would do the opposite, or Alt W. Actually, I have a whole video on my hotkeys if you guys are interested. Very, very helpful to have hotkeys when you're day trading. Okay, so there we have it. So those are my average prices. I'm not going to buy the other ones today because I do think we're going to see a little bit of a dip here, but if we don't, I'll be accumulating into it over the next few days and few weeks, just constantly DCAing into ETFs and Bitcoin spot price. So that was the first one I bought. Really exciting. Let me know in the comments below which topic you want me to break down next regarding Bitcoin or anything in the crypto space. I would be happy to do so as an upcoming video. I know this video was a beast, but thanks for tuning in, guys, and dropping that like. I'll see you next time.